Federal Reserve building, interest rate charts, headlines reading, rate card comings, and Fed shifts tone as inflation cools. After 2 years of aggressive interest rate hikes, the Federal Reserve is finally signaling a change in direction. With inflation easing and job growth slowing signs of softening, the Fed has hinted at the possibility of cutting interest rates as early as the September. Fed pivot ahead possible rate cut this fall. What's behind the Fed's shift? US inflation chart trading downward employment data snapshot. Let's start with the numbers. Inflation has now cooled to 2.4%, its lowest level since early 2021. That's finally within striking before distance of the Fed's 2% target. Grocery shoppers, gas stations showing lower prices. At the same time, job growth, while still positive, has slowed for the third month in a row, with new data showing fewer wage pressures and a slight uptick in unemployment. Fed Chair Jerome Powell said that we are encouraged by recent inflation data and we are closely monitoring labor market to draw trends. Translation: the Fed may finally be ready to take its foot off the brakes. What a rate cut means for you. Mortgage rate, credit card apps, small business loans. So what does a rate cut actually mean for everyday Americans? If the Fed's lower rates this fall, mortgage rates could begin to drop, making home buying slightly more affordable. Credit card APRs may ease, helping borrowers manage his high balances. Business loans become cheaper, a boost for entrepreneurs and small firms. Home buyers, small businesses reopening, and consumers using cards. Home buyers, small business reopening, consumers using cards. It's a potential economic tailwind, especially heading into the holiday season. Markets react to Fed's signal, Wall Street trading floor, green stock tickers, bond yield charts. Wall Street liked what it heard. After the Fed's July meeting, minutes heightened at policy flexibility, markets railed with the Dow and Nasdaq both posting gains, bond yields dipping. Investors are now pricing in a 70% chance of a September rate cut, according to CME Fed Watch data. Economists say that the Fed's tone has clearly softened. If data keeps trending this way, a cut is likely by September, maybe even a second one by December. Risk has caution flags, shipping ports, global unrest, oil price graphs. But the Fed is not all in just yet. Officials have stressed the need to stay data dependent, especially with global risk still looming. Key concerns include a potential oil price spike, escalating geopolitical tensions in the Middle East or Iraq, slightly inflation in house and services. Jerome Powell said that we will not hesitate to act if inflation resurges. Our commitment to price stability remains strong. So, while a cut is likely, is not guaranteed. The 2024 election angle, Trump and Democratic candidates campaigning economic headlines. There's also a political backdrop with the 2024 election around the corner. The Fed's decision will be under a microscope. A rate cut could ease a voter anxiety about the economy, but critics may accuse the Fed of helping or hurting one side politically. Political analysts say that no matter what the Fed does, it will be viewed through an election year lens, even though their mandate is strictly economic. People shopping, construction sites, Fed building, Wall Street bell ringing. After months of economic turbulence, the winds may finally be shifting. The Fed's message is clear. Relief could be coming, but the path remains declared. One wrong turn and the soft landing could still turn into a crash. Rate cuts possible this fall, first September meeting, all eyes watching. Subscribe for more updates on the economy, interest rates, and what it means for your wallet.